Welcome to the StockManor.com studios here in the Black Hills of South Dakota. I'm your StockManor, Brian Johnson, and I'm making professional trading simple. And welcome to the first video of the new year, 2010, 2010. I think it'll be 2010. People will probably just call it 2010. Wouldn't you think? Shorter? Quicker? Yeah, 2010. And we ended Friday on a move at the end of the day. It actually fell to begin the day, then kind of drifted sideways before dropping again at the end of the day, giving, I guess, the Bears something to cheer about on the last day of the year, but really about the only thing they had to cheer about for months and months and months. It's certainly days and days and days. It's been a long time since we'd actually had any kind of a move down in the markets. But as you can see, and after further inspection, really, there isn't anything broken from the bull side. We are back below a major level in the Dow, and that's 10,500. But not below any of the major levels in some of the other indices. And we do know that the Dow's the lagger, so it could very well turn around. Even at this point, it could turn around, being it's at the 20-day moving average, and move itself back up. So what we will be watching for coming into Monday and early next week is whether or not this move is sustainable. I'm going to say whether this move is sustainable to the upside. We have been watching the move up, a high base being put in. Last day you can see it dropping down there. But we've seen many days in the past. If I zoom this in, I just went ahead and skipped ahead over the 60-minute chart right to the daily, and you can see it move down, 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 doobie-doo, down, down. And you can see these big red candles that we get on the down days, but they've always been met by a follow-up of smaller up days. So I'm not super impressed with this move here. The Dow, like I said, below 10,500, but it is a lagger. So I would have been more impressed had I seen the other the other indices drop below that. And I'm not convinced that the move at the end of the year might not have been maybe some restructuring by some portfolios. It was pretty broad-based. I saw a lot going through chart after chart after chart this weekend. I saw a lot of the same thing, and that was lots of stocks falling right at the end of the day, all doing the exact same thing we saw in the indices, which obviously would make sense if the indices make up the stocks. But the fact that a lot of the stocks were all doing the same thing could just simply mean some sort of a restructuring of portfolios. It doesn't necessarily mean that we're setting up for some gigantic fall yet. That has yet to be proven. There's a lot of work yet to be done by the bears to prove that scenario to be right. So watch this area here. Here is a previous support line here. The 20, okay, it did stop at the 20, very logical, but I'm not really all that concerned about the 20 when it comes to the Dow. You really want to keep your eye down here on this 50-period moving average. That is a lower trend line. More importantly, it is that 50-day moving average, and that has proven to be very strong support for quite a while now. The bigger level is the 10,200 mark. We break and close below that on the Dow. Now maybe the bears have something to blow their horns about. So moving on, you can see the NASDAQ on a 60 with that quick move down at the end of the day, right back to or at the 50-period moving average. It's still got, really to equal what we saw in the Dow, it has to retest this 1818 mark back here. The Dow's mark was 10,500. This is about the 1815 to 1818 mark here. And it's obviously a long ways away from that. So yes, like I said, big move at the end of the day. Doesn't mean much yet until we see it come back and maybe at least retest this area. From the daily standpoint on the NASDAQ, here we looked like we were putting in a high base before a move back down, back into this support area here. I still like this trend line. It isn't perfect by any means, but you can see that it's pulling back and stopping here on support, but after a huge run up into the Christmas season. Here we have it on a weekly, and you can see it putting in just a little tiny candle up here, still above all of this more major resistance that we broke through a couple weeks back coming into Christmas. Now, last week, I said I would be very curious to see what happened during New Year's to see if it would hold. Most of the indices did hold all of their gains from the Christmas week. So now coming into the new year, they finished out the month and they finished out the year really very strongly. Moving on to the SPX on a 60-minute, it fell back to the 1115 mark. So you can see what I was talking about. The Dow being the lagger, it is down below 10,500. The S&P back to its level of 1115, and the Nasdaq far exceeding its level up there with the 1680 mark, waiting for it to come back and retest 1615, 1618 or so. This is curious, though, from the standpoint of it looked like it was slowly working its way down before a big tumble at the end of the day. Once again, I'm not going to get too overly excited by this because it could have been some sort of, as I said, some sort of end-of-year restructuring before the new year began. Very difficult to tell if the bears are going to take this anywhere at this point in time because we have not actually had a trading day in the new year yet. SPX on a daily pulling back to this overhead level of what was resistance now should become support. We'll see if that works. I do like that this upper line held for those of you that were playing along with us last week and got short around the 1128 to 1130 area. We put a little stop up around 1132 and played it back by the end of the week for a pretty good gain. I was a bit surprised that on the last day we saw that much movement, but if you were short, you were happy. So here we are back at support again. SPX on a weekly, putting in a little tiny candle up here showing this is, let me zoom this in here a little bit. Let's just go ahead and take the months off, go right to a 1 year. And you can see it just, since we started back here in July, look at how the price has slowly continued to trickle its way upwards. The markets overall are absolutely due for a pullback, and they have been. We've been talking about, or I've had to listen to other people talk about pullback since back here, September, October. It's pulling back, it's pulling back. Everybody thought maybe it was this move here. Nope, and it continues up into Christmas and past Christmas. So once again, when? The question is always when. When will it happen? We don't know. But watching the charts will tell us. We're really watching for a break and a close below this 1100 area. That would be a good first start for the bears in a potential pullback. Now, not a pullback to 900 necessarily, but at least a pullback that might take us back here to 1070. Give us a chance to breathe and look to see what the next move will be and then re-enter long if that's the direction it appears to be going, or to get a little bit more heavy short. The VIX also agreeing at the end of the day. The fear pouring into it, pulling it up, but from a weekly standpoint, we're right where we were, and that's in between these two areas here, which still shows little to no fear within the market itself. This is becoming a very good area to show the norm for traders. So anything outside of this maybe starts to get a little bit more complacent or a little bit less complacent up into this area, but for the most part, anywhere in between this little 17 to 22 range is just kind of normal. Apple on a 60-minute, you can see I drew a line in here. Anything above that could